from 12 p.m. London time or 7 p.m. Singaporean time to 3 p.m. London time or 10 p.m. Singaporean time. So you can join us daily through this website, or you can definitely just join through our website where you can immediately join us for any discussions and any topics that you wanted to ask. You can immediately ask from there. So make sure that you click on the below description button in order for you to join the discussion room. Otherwise, I couldn't be seeing you guys asking me any questions. Honestly, guys, so make sure that if you feel that this live streaming sessions would be worth your time, you can try to click on the descriptions, click on the website to join the discussions so I can answer your questions. Okay? So today has been kind of a strange day where we are seeing that gold is just hovering around the all-time high brackets where we have already been getting some confirmations on the market that they will be cutting their interest rates. And we also know for sure that the market is currently negatively pricing in the oil market. So probably there will be some chances coming up from the oil market. So make sure that you guys look for the oil trades, okay? And moving on, I will also be sharing about the other currency markets as well, as usual. Because we know that from the currency markets there is a lot of things to be seen where we are seeing the weaknesses still comes out from the US dollar, and suddenly today we are seeing the strength coming back from the Japanese yen, and I believe from those trading pairs there could be some short actions that we could have taken. Okay, so I think that would be one of the most interesting part from the currency market, from the Japanese yen side, and definitely also from the other currency pairs. And we'll be looking through the currency strength charts in order to determine whether which currency does look better for now. Okay, so I'll be walking and talking through all of these content lists where we will be reviewing the price changes, the topics of the day, what happened since yesterday, and what can we use out of those insights to get some trading ideas of the day. And definitely, if you guys have any other questions, as I've mentioned, you guys need to click on the descriptions below and try to find the link to join the chat room to ask me anything regarding the materials or anything related to the trading world. Okay, so I'll be talking through the first part, which is usually always revolving around the commodity sides. As we guys can see that the gold market has been kind of weakened alongside with silver, definitely the crude oil as well. And we could also be seeing that the copper market is also slumping over. Meanwhile, moving on to the currency market, it's very obvious that the US dollar still remains its strength, and we can see the changes is quite volatile, but we'll be looking through the currency strength charts for that. And we also have the stock indices moving kind of negatively on the US market, but we still see some good signs of the Hang Seng Index still up alongside with the Nikkei. But the Nikkei started to fall down after the release of the LDP nominations, where there are a lot of things going on through the market where they believe with the new nominations out of the Liberal Democratic Party in Japan could really lead to another rate hike on the Japan side, and that will definitely lead to a lower Nikkei index. And moving on to the last slide from the cryptocurrency market, as we know that the cryptocurrency market has been swinging up and down, and we can see that the cryptocurrency markets are giving us kind of mixed signals, but overall, we are still seeing some clear signs that they will be going up further alongside with the expectations of another rate cut from the US Fed rate. All right, so we will be talking through the news, what happened since yesterday. So we can see that the global stock indexes reached record highs on Thursday after a strong data, including an unexpected drop in the weekly US jobless claims, led traders to cut bets that the Federal Reserve will make another 50 basis point cut at its November meeting. And that's why we can start to see that yesterday gold, after reaching the record prices around 2,680, started to retreat it back to 2,660 plus. And Those data is coming out from one of it is the applications for the US unemployment benefits, which we usually know as the initial jobless claims, fell to a 4-month low, remaining muted despite a recent slowdown in hiring. So that's one of the news to show that the economy is still doing well from the labor market. That's what the Fed thought about that. So that's why they see some dangers, but they still see the hiring market is still doing quite well. And also another report stating that corporate profits increased at a more robust pace than initially thought in the second quarter, while GDP growth at 3% unrevised. So that means that the GDP data is accurate from what they have been releasing since the last previous months. And as a result of this data, the US Treasury yields edged higher after that strong data, where 10-year yields rose 0.8 basis point after reaching a high around September 4. And traders are now pricing in a 51% probability that Fed will be cutting rates by 50 basis point, down from 63% before the most recent data. And the Swiss National Bank do make some big decisions on their side when they decided to cut 25 basis point on Thursday. And this was the third such move this year. So they have been seeing the interest rates from 1.75% right now down to 1%, as they choose not to go for larger than 50 basis point move that market had been seeing as a possibility. Next, investors will be anxiously waiting for the Friday's release of the core PCE price index, the Fed's preferred measure of inflation. So there will be a lot of trading volatility, especially related to gold, related to silver, where there will be a lot of movements coming up from there. And as a result of all of these data, we are seeing that the dollar index fell 0.42% to 152, on track for its sixth drop in 7 sessions after rising as high as 195 before the data US has indicated that the economy is still doing pretty much well. And the euro was up 0.41%, and the Swiss franc rose after the country's central bank cut rates. Moving on to the commodities news side, we are seeing that US crude oil fell another $2.02, settling at $67.67. Kind of a unique number, guys, per barrel, after the media said that Saudi Arabia plans to dump its unofficial crude price target of $100 per barrel. And in the other commodities news, we are seeing that spot gold managed to close higher at 0.5% at 2,670 per ounce after hitting a record high of 2,685 earlier in the day after the release of US GDP revisions as well as the initial jobless claims. So that is part of the news that we have been going through for today. And one thing is for sure, we will be talking about the US jobless claims, the durable goods sides, and as well as the refreshed GDP. And we also will be talking about the Switzerland rate decisions. All right. Okay. So as you guys seen from this graph, we have gone through all of this central bank rate decision this week. Even from the Sri Lankan side, we also do have released those data, but it's not important for us. Overall, we have seen the most important data coming out from the Australian side as well as the Switzerland side. So we'll be talking about Switzerland for today, which will be the important thing and how it will affect the US dollar, Swiss franc, and then Swiss franc against the Japanese yen. I believe that there will be a lot of interesting market movements from those markets. Alright, so as you guys can see, there has been some kind of a big volatility coming out from the Japanese yen index, where I believe it was due to the release result of the LDP nominee have been seen as one of the hawkish sides of the government, which will be very helpful for the BOJ to decide how they are going to proceed with the next rate hike in the next few months. So that is viewed as a positive news, and the Japanese yen managed to strengthen by quite much. And we can definitely see that across the pairs that we can be seeing that Swiss franc surprisingly also maintain its strength, and we can see that the US dollar weaken. So there will be some huge opportunity on the market, and we can definitely use that as well. Okay, so we'll be looking through the currency pairs, probably Japanese yens against all of this pair. Probably I will be looking closely through the weakest part, which is the New Zealand dollar as well as Euro and GBP. So NZD JPY, Euro JPY, GBP JPY could be one of the choices, as well as we could be also seeing from the USD Swiss franc. With the result, it could be really impacting those Swiss franc in the next few months and new next few weeks. So if you guys are a long-term trader, stay tuned on that, and I will be talking through about what has been going on and what is the expectations of Swiss franc in the future. Okay, guys. So charts, what has happened? Okay, so I know that most of you guys should have been pretty much more interested on the commodity side. So I will be beginning with the commodity sides first. So yesterday, if you guys are a regular viewer of the live stream, so congratulations. Yesterday, I do share a signal on the gold side twice. So as you guys can see that I've shared this signal for a re-entry at gold. So that means we have already profited twice out of gold on that very same day during the live stream, and we managed to gain around $4 to $5 at the first trade, and the second trade is about $5 to $7. So that's kind of a good result just in a matter of 1.5 hours. Yes, so because my live streaming session is lasting around those time, and we can see that the market movement after the release of that data has been kind of bad because we are seeing the probability of a lower interest rate cut on the Fed rate side. Okay, so what has happened after that? So afterwards, we are seeing that the market has since then started to bounce volatile, and we can see that the volatility has remained between the 2655 towards 2660 up towards 2677, which means we are seeing that sideways range between 2660 towards 2680. And since then, we are not seeing any clear market signs. Definitely, it's just moving on the sideways range. But with close attentions, I would be making through is we are currently seeing a possibility of a breakout if anything happens, because we are seeing that tonight there will be some huge movements coming up from the personal income data, personal spending on a monthly to monthly basis, as well as the most watch data from the Fed side, the core PCE price index month to month. Okay, so that's a possibility that the news could came out and give us some surprises, and I believe that it seems that the market has started to try to find to break out of this downtrend, minor downtrend, because I'm looking through currently at the 15-minute charts. So there's a possibility it could be breaking out of this 2670. So before that, I will be giving you guys a small outlook on the daily time frame, because it will be giving us much more confidence and certainty from a longer time frame to look at. Okay, so one of the very first things that we can look is right now it has rebounded from the low around 2660, and right now it's hanging around 2670. That means the trend is still pretty much clear as I forecasted, and I'm seeing that this resistance line is still there. So my expectations with the release of the data coming out later night. So let me check on this site. So today we have not a lot of good news coming out, but mostly it's from the Euro side. But we can see that has been giving us some good signs on the Euro inflation, as you guys can see. So I will be talking about this on Monday live streaming. So if you guys are interested to hear about what would be the outcome of this inflation data, make sure that you guys come back and follow the live streaming at 12 p.m. London time. Okay, so tonight we will be also having German's unemployment rate. It's much worse than expected, but it has been kind of expected by most of the market side because we know that the economy from the Germany is not doing very well. But right now, what we are having going to see on the next 1 hour and 10 minutes is the US price index year on year side. Okay, as you guys can see, there will also be some huge news coming out from the Canadian GDP to show us how well the Canadian dollar will be doing. So I'm expecting there will be some kind of volatility on the US dollar Canadian dollar side. So let us focus more on the US side first, okay? So we can see that the previous numbers has been showing that compared with the forecast, a lot of people are expecting that inflation rate will be coming down. If not, it seems that what the Fed has been doing is wrong because currently yesterday's data have been showing us that the US GDP has been doing quite okay at around 3% GDP, as well as initial jobless claim has been strong. And if the data surpass the forecast, so let's say inflation rate was still between 2.3% and not below 2.3% on a year-to-year basis or even the month-to-month basis, and if this data came up surprisingly higher, I'm expecting that the gold prices could be going lower. But if the data came out lower, that means it will be a good thing for the market. Okay, so as you guys can see, probably I would be paying close attention from the year-to-year data rather than a monthly-to-monthly basis because from a monthly-to-monthly basis, a lot of things could have happened. So we could trim that out and look only from the year-to-year basis and mainly from the US core PCE price index here. Okay, so I will be paying close attention towards this. So I'm expecting for the US core PCE data on year-to-year basis at around below 2.7%. Otherwise, I believe that there could be some huge consequences on that side. Okay. As well, we also have US consumer spending. So make sure that US consumer spending could be heading lower for them to see that the US initial jobless claims have been proving that people have not been able to have that power to spend money. Okay, so I'll be paying close attention to this data. And right now, it seems that from the market consensus on the trading side, it seems that the market is due for another upper range rebound from the charts as we can see. And that's why I still expect that the data could be coming out positively for the market, which means it could be lower inflation rate, meaning that the Fed could have bigger room to cut their rates. Okay, so as you guys can see, so probably if you guys want to trade on today's market before the the data release in another hour, I'm expecting that it should be much better to do a buy and put your stop losses just below. So try to time your entry, guys, because very important. And try to put your stop losses just below today low at around 2,658. And try to aim around the first price target 2,670. Next target could be around. Okay, so I'm just gonna give you guys, this is harder target, price target 3. So just make sure that you guys focus only on that. Focus only on two price target around 2,600 and okay. Okay, for now, from what we can be seeing, it is much more likely to go higher. But make sure you guys could enter your timing, it's very important. So this will be my first signal for today. So if you guys haven't been entering the trade, you guys could have wait for better entry prices. If you guys have entered the trade for a buy positions, then I will be suggesting you guys to pay attention towards the entry prices and try to put trading stop losses just in case anything worse happens. Okay. All right. Then I'll be moving on towards giving some outlooks on the currency side. Okay, so what has happened on the currency side? As you guys know that the Swiss franc has been moving quite much and volatility after the release of the S&P decision to cut the interest rates, and that would really help to deliver a lower Swiss franc prices. So if you guys look on a daily time frame, I'm seeing a possibility of, as you guys can see, I even draw the possible scenario for you guys. I'm seeing a possibility of a bear flag from this side, and I'm expecting a total movement of around 3.7% over the next few weeks, guys. Because if you guys look at the overall data, I even give out a lot of sell recommendations in line with my view of lower US dollar. And as you guys can see on a longer time frame, since 2022, you guys can see from these charts that the market is going through that primary trend of going lower. One. Second, if you guys can see on the minor trend, it has been giving us some kind of rebound first before right now we are seeing the secondary trend has been showing us that continuations of that downtrend. And right now, if you are looking through this USD CHF, the market has been very clear. On the long run, it will be going down. On the short run, it will also be going down. But I will be expecting there will be some volatility between these ranges, 0.85 towards 0.84. So there will be some volatility before it could really go down. So for you guys who are short-term trader, make sure that you guys do enter around the upper range of this sideways for a short. And for you guys, if you believe that this outcome of a bear flag could happen in the future, because I'm seeing the bear flag possibility coming down towards 8.1, 0.81 dollars per Swiss franc. So that's why I'm seeing the possibility of it to go down. Okay, if you guys believe at that, you guys should have taken the positions, try to enter around these prices. As you guys can see, I've recommended around these entry prices with the stop loss at around this. And right now it seems that it has been going quite well since since yesterday I've shared these insights and analysis, but I will be talking about these decisions out of the Switzerland Central Bank later on. But the trend is pretty clear. I will be giving out sell recommendations, but I won't be commenting about the entry prices because I've been sharing on it on the previous 2 days, and I give you guys the possible entry scenario. So this price forecast I've given is during that prices. So it has been pretty much clear, and you can I've recommended entering at around 0.85, so near that 0.849. And right now, if you guys still hold on that trade, if you guys are a swing trader or trend trader, definitely right now you could be seeing a profit of around 80 pips, I believe. Yep. So that would be kind of a good move on the currency market. It's a good move on that. Okay, so that will be the first outlook on the currency side. Next, I will be looking through the Japanese yen market. Okay, so since yesterday, I've been sharing my outlook on the Japanese yen. So I'm pretty much clear saying that I am expecting that the Japanese yen could still be going stronger. And yesterday, it seems like the Japanese yen started to go weaker until decisions of the rate hike could come, but suddenly today came out a good news from the LDP side, the Liberal Democratic Party, that has nominated their leader, where he was more on the hawkish sides rather than the dovish sides. That means there's a quick possibility and a huge hope for the Japanese Bank of Japan to do a more faster increase and getting a much better cooperations from the government side and the Bank of Japan. So if you guys can see, pretty much it's very clear it will be going downwards, but unfortunately, right now it's already touching the sell area resistance area for almost all pairs that is against the Japanese yen. So in this case, it's the Euro Japanese yen, guys. Okay, so I'm sure that most of you guys couldn't see the charts because it was blocked from you guys, I believe. So just now, I've been showing you guys the US dollar Japanese yen. So this is the charts already even also touching around this sell area resistance area, guys. Okay, so it's near there. And I'll be showing you each of these charts against the Japanese yen pairs. So this is the Euro Japanese yen, guys. So it's very clear that the Euro Japanese yen also touched the resistance area before going lower. It's also the same case, I believe, for the Canadian dollar Japanese yen. Still showing you guys that continuations of that downtrend after reaching the resistance area around here. And even I've already drawn the possibility scenario happening on the CAD Japanese yen. I've been drawing this lower high, lower low, and then expecting there will be some volatility before it would be going lower. It seems that it could be coming faster to reach around this 102.86. Okay, guys. So almost every single pair that is against Japanese yen have been showing very clear signs on the market that right now is the best time to do a sell signal. So if you guys could look through the charts, you could have been seeing pretty clearly that I've been sharing a lot of sell recommendations rather than buy recommendations on the Japanese yen side. So if you guys couldn't see clearly, I suggest you guys do maximize your screen for you guys to have a better view of the charts, okay? But I'm sure that most of you guys couldn't see the symbol because it was blocked, but I will be letting you know what symbols that we are looking right now. Okay, so right now we are looking at Swiss franc, Japanese yen. So I would have been going through the Japanese yen graphs and to show you guys the possibility for where the directions it could have been going. It's also the same case for the stronger pairs such as the Australian dollar side. Right now we are looking through these charts, showing the possibility that it's currently reaching the resistance sites and unable to proceed higher. And I'll be moving to its neighbor, New Zealand dollar, Japanese yen right now, guys. And it's pretty much clear after reaching the resistance, unable to go higher than 91.5. Right now it comes back below 90.44. So the trend is pretty much clear on the Japanese yen side as well. So the Japanese yen has been strengthening, showing its case that the Bank of Japan and the government could be working better and closely. And if you guys are in line with my view, I suggest you guys you can try to time your entry, put a sell signal, try to put the stop losses at today's high for you guys to continue that long-term downtrend movement. So if you guys are a position trader or a swing trader that focuses on multiple days or even weeks, I suggest that you guys could start taking positions on a sell against all Japanese yen pair, USD Japanese yen, CAD Japanese yen, Euro Japanese yen, GBP JPY. So I'm showing you guys right now is the GBP JPY. So basically, all pairs that is against the Japanese yen could have been starting the second wave of that downtrend movement, with the possibility today would be a good entry point, but I'm expecting there will also be some volatility because after such a huge decline, there will be some rebound movement. Probably it will not be surpassing that resistance line, but currently we are not seeing any good entry points, but the trend is pretty much clear. It's heading lower. As you guys can see, even on this GPB JPY, it's almost reaching its previous uptrend channel and almost touching it. And right now, we are seeing it come back before and below this resistance line that has been able to surpass before the weakening of the Japanese yen. And right now, it just went back below and continuing that weaknesses of that downtrend momentum. So if you guys want me to redraw the charts, I can show you where it could be going next. Okay, so from these charts, it seems that GPB Japanese yen is just the outlier where we are seeing that the GPB has been quite strengthening across the months with pound has been the one of the best. I mean, it's the best currency in the group of 7 countries, and that's why we are seeing that GBP Japanese yen could be an outlier compared to any other pairs that is against Japanese yen. But one thing is for sure that it could be probably heading to the nearest target in the near future around 188, guys. Okay, so there will be some possibility reaching around those price. Okay, so right now we haven't been able to see any good entry points. Honestly, guys, after that huge drop in just a matter of an hour, probably the best case scenario is to wait because I'm not seeing any good signs for entry point, and right now we are seeing the possibility of a rebound first near near the resistance area or around the midway of that sideways before it could be possibility going lower. Okay, so I'm opening up that shorter time frame to show you guys the possibility because right now we are in a very tricky situations. If you guys want to start to do that short positions with that optimisms, it's kind of hard to do so because we are in a support area for most of the trading pairs. So let me share with you guys. Okay, so as you guys can see, it's all in a support area which hasn't been able to let us to make a consistent and a good entry points. So that is Euro Japanese yen right now. CAD Japanese yen, it's also showing us that same outlook, guys. CAD Japanese yen, it's precisely at the support area for now. So it won't be a good idea to do a short unless we get confirmations breaking down of the low to get that kind of confidence to do that sell signal continuations. So this is CAD Japanese yen. And I will be also sharing with you guys the AUD JPY. Right now, as you guys can see, it managed to rebound from that support area right now. It's still hanging on, waiting for that confirmation. So I will much prefer to wait after it rebound around this midway of this sideways range before deciding to do uh, sell short on both of these Japanese yen pairs. So next, I will be sharing you the last NZD Japanese yen, also showing us the same thing after touching the support. Right now, it is undecided, and I will be much prefer to do the sell around 91.2 for NZD Japanese yen rather than risking it. And it could be reaching those price target very easily. on the Japanese yen pairs. Right now, we are looking at gold. So if you guys couldn't see the symbols, we are. Oops, it seems that wrote the wrong stop losses. It should be 2658, guys. Okay, 2658. My mistake, guys. Okay, so I'll be continuing with the lessons, but before that, I will be looking through silver prices just in case something good comes out of it. All right. It seems that right now we are looking through the silver chart, guys. Silver charts, and it seems that after going through some correctional phases, right now we are seeing the possibility of it to rebound first rather than gold, guys. Okay. So right now I'm seeing the possibility of silver going higher first. Okay. It looks like it's much better to do that shorter time frame. Okay, it seems that the silver has a much better breakout phases than gold for now. So I think the best case scenario we could have been doing right now is looking through the silver side for now. Okay, so I will be recommending a gold silver side first for now, and try to cut your losses just below this hour's low. So entering the trade around 32, put your stop losses just below this hour low, 31.85, just to be safe, and try to aim for 32.07. Next, you can try to aim around. All right, guys. So this will be a much better signal for you guys to trade. Silver signal for now. Okay. So this is also the other signal for tonight. Yes. Okay. Okay, that's great. If you guys have trade on it, good job. And I will be back with the lessons. All right. Okay. So it seems there has been some good signs on the gold side as well as on the silver side, guys. Okay. Okay. So before I and back to the charts, I will be reviewing what happened on the news sites. Okay, so why I would be interested to talk about the news sites, because what happened on the news could be a good event, and those events could be leading for us to make our trading decisions, guys. And those news could be helping us to determine what kind of trading pairs could be the best pair. So if you guys unreluctant to learn more on the event side, I suggest that you guys can start to do so. Okay. All right. So let us begin with the Japanese yen side. So yesterday we have some data coming out from the Bank of Japan where they are sharing the release of the minutes of their meeting from the July's meeting, showing that some of the members are giving some of the opinions related towards the Bank of Japan's decisions making. And one thing is for sure, they are certain that they will be increasing interest rates, but they are just uncertain about the timing and how big the rates will be. So as you guys can see that at least two in the nine-member board saw the possibility to raise rates further, with one even saying that BOJ should hike the borrowing cost in a timely and gradual manner to avoid being too forced to do so rapidly later. And also another member of the BOJ said that raising rates further once it was confirmed that firms were increasing capital expenditures, wages and price. And also another member saying that normalizations of monetary policy must not be an end in itself, as the BOJ still needs to look at monitor various risks and move carefully. And the last notes that are coming up from the minutes of the Bank of Japan side has been saying that the BOJ should avoid a situation where market expectations for future rate hikes increase excessively. Meaning is one of the members are saying that the Bank of Japan should be avoiding the situations where people are expecting the Bank of Japan will be increasing interest rates too big and too fast. Okay, as inflation expectation is right now around 2% target, and inflation also remains one of the risks as well. Okay, so overall, from all of these comments, we can conclude that most of them are inclined to hike interest rates once all of those data economic, especially from the economic growth, would be giving those indications that it is much better to do a rate hike. Okay, guys. So today, with the coming of the LDP party nominee has been elected, and that would be a good news from the Japanese yen side, and we have already seen that possibility. Okay, now I'll be talking more on the Swiss franc side. Okay, so if you guys are interested on what has been going on that side, so I believe with yesterday data has been not yet good. As you guys can see, it has weakened the positionings of the Japanese yen. So this is the Japanese yen charts, guys. And one thing is for sure, right now we are seeing the possibility of the yen to continue strengthening after the release of the elected LTP nominee. Okay, so this is the USD Japanese yen charts. I'm not seeing any huge market movement for now. Probably let us check back to the GBP JPY. And it seems that it hasn't been moving that much as well on the GBP Japanese yen. Okay, maybe let us try to check the other pairs. Not moving much. CAD also not giving that confidence as well. We are not seeing any huge market movement, guys. Okay, so not for now. AUD Japanese yen. Okay, AUD JPY hasn't been moving quite much as well. So NZD Japanese yen. All right. It seems that most of it are trying to rebound, so we will be waiting for those confirmations. But one thing is for sure, right now we are seeing that the USD Japanese yen remains one of the best choice to do the short. Okay, from the current charts that we are seeing, from a hourly time frame, it seems that USD JPY could be the good trading choice for selling it. Okay, guys, probably I'll be waiting confirmations breaking lower than 13.1. Maybe we can do that trade. Okay, but I'll be waiting first. Okay, guys, it seems that it should be heading lower, contained between this area, and I will be seeing it later on. Okay, so I will be discussing on the Swiss franc side right now, so I'll be giving you guys a little outlook on it since I have already been sharing the outlook of entering the sell around this and stop losses about this. So it seems that there isn't a lot of things that we could have done for now. So probably it will be best to stay on the sideways before we are getting confirmations breaking down of this 0.841 from the USD CHF. Okay, because I think I've already shared this. Couldn't do much for now. Okay, so the trend is pretty much clear. It's still going downwards for the Swiss franc side, going lower and lower. I've even predicted and forecasted on this side, it could be going lower and it should be close based on my predictions. But it's not that important. Right now, the main focus would be trying to find a good entry point to do that sell signal on the USD CHF. But currently, we are not seeing any good signs, but it is much more leading for us to do along for now. But it doesn't seem that good because we also know that the long-term trend of the USD CHF should be going lower. Okay, so I'll be discussing about that for now. All right. So we do know that the market has not been very well on the USD Swiss franc because we do know that the market has been going through some tough phases. And one thing is for sure, guys, that the market hasn't been very well on USD because we know that the US dollar index has been falling down pretty much. And right now, with the downfall of the interest rate side, that could meaning that the Swiss franc could be weakened, and there's a possibility that the US dollar could be strengthening. Meanwhile, the Swiss franc could be leading for more interest rates cut in the future. So I'll be talking about that now. So as you guys can see on this slides, that Swiss National Bank decided to cut the borrowing cost to 1% by a quarter point. So that means it has been cutting by 0.25% and one of more of interest rate cut to come if needed in its attempt to contain the strength of the franc. So that means that the Switzerland government is paying attention toward the strengthening of the Swiss franc and they want the Swiss franc to be weakened and weakened. Okay, so the SNB has already stated that they will be. So as you guys see that the Swiss National Bank is one of the first countries to do the first reductions in this current easing cycle globally in March and faces the challenge of the CPI on path to weaken further below its target band around 0 to 2%, and that could be bring this inflation that would be troubling for the SNB side. And the officials lowered their forecast for consumer price growth and now predicts it will be averaging around 1.2% this year for the inflations and 0.6% in 2025, 0.7% in 2026. And they are trying to maintain it between that 0 to 2% target band for the CPI data. And avoiding a bigger cut could expose the SNB to further criticisms from exporters exposed to swings in the currency, not least because this is also the last Switzerland scheduled decisions before the US election, whose result could be causing market tremors. And because if a strong Swiss franc, that could be leading to hardship for the exporter side. Okay, so as you guys can see, the policy rate has been reduced to this 1% level for now, in line with what the survey median has been seeing. And people are expecting that it could be cutting their rates alongside with this movement, guys. Okay, they're expecting that it could be following this rate cut path, but it seems that right now it has been stopping around this 1% level for now. Okay, that's one of the sides from the Switzerland side, and we can see that Switzerland is also one of the first side to cut the interest rates, as you guys can see on this blue side. That means it's very much clear that the Swiss franc has been cutting interest rate pretty much quicker than their neighbors, such as France side, the Euro side. So the Euro side is just reduced by 50 basis point. Meanwhile, the Swiss franc has been reducing rates by around 75 basis point, okay, in total. All right. So what is the reasons for the Switzerland National Bank to cut their interest rates? As you guys can see, one of the very reasons is the inflation last month weakened to 1.1%, below their expectations of 1.5%. And even the Switzerland government also react and expect that it could be dropping to 0.7% next year, closing in on the lower bound of the 0% target range. And although we can see that Switzerland economy is still doing quite okay, even though Swiss industrial activity is subdued, the services sector helped sustain its growth at around 1% before expectations around 1.5% growth next year. And as a note, guys, the Swiss franc has been rallying to its strongest level in nearly a decade, causing a persistent headache for the SNB all year and raising the possibility that it could intervene to stem further gains. And the strength of the franc, depressing the cost of imported goods, recently approached the all-time high levels against the euro. So Euro CHF should be looking at all-time high levels, guys, okay? And the current vice president of the SNB will be taking over the central bank's helm next week and is seen to stand again for continuity at the institutions, as this is one of his remarks, saying that we will have an assessment in December, but from the current junction, it looks like further cuts could come. Okay, so it seems that the Swiss franc is headed to a weaker currency, and that announcement initially boosted the franc, which rose as much as 0.3% before winding back gains to 0.945. Okay, so as you guys can see, the Switzerland Central Bank even decided to lower their forecast in terms of the inflations. Right now, they have inflations around 1.1%, and we are expecting that they could be lowering the forecast from month to month and year to year. So the most recent, they have been able to reduce their forecast pretty much quickly on the September side, as you guys can see. It's lower than the previous forecast, meaning that they are seeing inflations are weakening and weakening. And that is also a source of problem for the Swiss country because they don't want it to be too long for an extended period of time. So they will be trying to reduce their currency's valuations and try to make sure that there is inflations rather than disinflations that has been happening for a lot of times from 2010, 2012, 2016, and even 2020 because it was due to COVID. So they don't want this to happen and try to maintain the inflation rate between this area. Okay, guys? And as you guys can see, Euro and franc has been reaching an all-time high levels, meaning Euro CHF could be a good trading pair, guys. Okay. Okay. So Euro CHF could be a good trading pair. All right. So I'll be giving you guys some up can we with these data. All right. Probably we can try to check on the euro Swiss franc to see what has been going on those currency. Alright, as you guys can see, it's an all-time high for the Swiss franc against the euro. And let me draw because I've never looked at it before. But one thing is for sure, the trend is lower, going lower and lower. Euro Swiss franc. Oops, not happened, guys. So let me refresh it for a while. Okay. Okay. It seems the trend for the Swiss franc has been pretty much clear. It's going lower. And right now, I would say it's kind of in an important support area as well. So if you guys do look at it now, okay, so it's currently a very critical point where there's a possibility rebounding around this range before going lower for the euro Swiss franc. So that's one of my view on the euro franc because I'm seeing the possibility of the we know that the euro would have been a lot more likely to cut their interest rates from the ECB side, but we also do know that the Swiss franc would be determined for them to keep the inflations not to be in that negative area. So they are more likely to cut interest rates faster than the euro side or even the US side. And that would bring devaluations on the Swiss franc side. So probably one of the best things that we could have been doing on this euro franc area would be shorting it. Definitely, guys. But we also need to look at the entry prices, trying to find a good entry point. Okay. For now, I do see some good entry point, but let us check back with US dollar CHF, and right now it seems that Euro CHF could be one of the better choices. Try to put the stop losses just above that high for the short-term trend. Okay, so probably we will be trying to do that sell signal. It will be a small trade, guys, because I'm putting a pretty tight stop losses here. 0.4942 stop losses at around this high, 0.943. Try to aim around. Okay, so there you go, guys. I believe that this signal has been triggered. All right. So this is one of the good choices after getting the insights out of the Swiss bank side, because there will always be something to make out of those lessons and translate it into a trading plan, guys. Okay, so that's why it's very important for you guys to learn out of what has happened on the fundamental side and what can we do on the technical side. Okay, so let us check back towards the gold trade. Okay, it seems that it might be going lower, guys. Okay, but let the plan to do it on its own, see how it will be going later on, because there are still some expectations to a rebound and then going higher. Okay, let us check too on the silver side. Okay, it has been also going lower but hasn't touched its stop losses area yet, so we'll be having a close look at it as well. Okay, so if you guys have any other questions, you can immediately click on that link website to have a direct chat with me, because I'm not seeing any of your chats on the website. Because if you guys are chatting on the YouTube site, I'm not seeing any of it. So if you guys want to chat with me, click on that link and join that chat room, guys. Okay. Okay. So I will be back with the lessons first, because okay, it seems that this plan could be failed, but okay, let it run on its own. If it's going down, we will be having it to go down. Okay. Okay. very close with our target price, honestly, guys, because it's just at around the high of 2,669, and our target is around 2,670. Okay, but we'll let it run on its own, and we will be looking closely with that later on. So I will back with the fundamental side, and I'll be talking about the US side. Okay, so this is the data where it was kind of bearish for the gold yesterday night. And this is the details where we are seeing that the US durable goods were higher than the forecast. So that's one of the good things, even if you compare with the US core durable goods actual data. And this data has been showing to be good for the US economy, meaning that they are seeing the possibility of the US economy still doing well, and there is no need for a bigger rate cut. As you guys can see, it was just slightly up by 0.2%, a proxy for the investment in equipment, excluding aircraft and military hardware, suggesting firms are limiting investment ahead of the elections. Because people are waiting for certainty from which government will be taking on the US side, and after getting the clarity, most of the companies will be decided to how are they going to proceed with their capital investment, hiring, and buying more stuff in order for them to expand their business. And they are certainly waiting for further declines in their borrowing costs, because we do know that after the Fed rate cut, the interest rate, people are waiting for more certainty, because right now they are seeing the possibility of a lower interest rates in the future, where a lot of people are already pricing at another 0.25% of rate cut or another 50 basis point, even though that possibility is lower. But there is always expectations that the future interest rates will be much lower. And you can see for all the other data, such as the US durable goods, even climb out for 0.5%. And also, core capital goods shipments, a figure that is used to help calculate equipment investment, climbed 0.1% after falling by 0.4%. And before that, the Atlanta Fed's GDP forecast also said that it could be increasing their spending on the third quarter. Okay, as you guys can see on this graph, to show you guys what is the case, that on a monthly to monthly basis, it has been growing pretty much well, as you guys can see here. And changes in the core capital growth is also on a monthly to monthly basis has been positive by 0.1% for this data. Okay, so it's pretty much good on that side. And if you guys look on it, on the actual data, it has been much better than the estimations. Okay, so it's very good. Everything is on track for all of the other side. Okay, so moving on to the next data that has been released yesterday night is the US GDP quarter-on-quarter basis, where it was seen to be up by 3%, same as previous and not lowered compared to the forecast, meaning that the US economy is doing very well and it will be going higher and higher. As you guys can see, the economy grew by around 294, and about two-thirds of that are related to a stronger consumer spending, which is the primary driver of the economy, growing at 2.8%, slightly down by 2.9% rate the government had previously estimated. Business investment was also solid, where we are seeing 8.3% annual pace lag from a previous lag of 9.8%, meaning that consumer spending, business investment are still doing very okay. And we are also seeing the economy expanded at 3% pace in the second quarter of this year. And the pickup from the prior quarter reflected increases in the consumer spending, increased inventory, and business outlay. And as a result, the GDP increased at an upwardly revised 1.6% for the first quarter of this year. And growth for last year was revised from 2.5% to 2.9%, though the source of the adjustments was concentrated in the first half, whilst the robust was down by third and quarter. So as you guys can see, that during the end of 2023 in December, the growth has started to decline, as you guys can see. So that's why there is some revisions, and these revisions came out where we are seeing that 2023 data, it was at around 2.9%, around this number, as you guys can see, around 3%. And next, we have also the real GDP advanced to 2.5% in the 2022, as you guys can see, where it was 0.6% point stronger than previously estimated. And they are also seeing that the first quarter of that year experiencing decline in GDP rather than back-to-back quarterly decreases. While still robust, growth was revised 0.5% lower to 4.4% in the third quarter and 0.2% to 3.2% in the fourth quarter of 2023. Okay, so as you guys can see that the 2023 data has been lower from 4.4% down to 4.9% toward 4.4%, and then 3.2% in the fourth quarter of 2023, meaning that there has been less momentum for the economy in 2024. And these latest revisions help narrow the differences, where we are seeing that most of the data was revised up from 0.4 to 1.7. 2022 GDE was also revised from 2.1% up to 2.8%. And this type of personal income, the GDI, including interest income dividends, will mark higher in 2023, explaining why consumers were able to spend more freely than they thought possible. And as you guys can see, that the next focus will be on the GDI, and it has been revised higher, as you guys can see for most part of it. So that's why a lot of the consumer spending has been quite good from the government data side. A lot of it was revised higher, as you guys can see on this pink side. Okay. And finally, one of the last data that would be related towards today's data release in another 10 minutes will be coming out from the US core PCE, where this is one of the most favored Fed favored inflation gauge, where they will be looking through at it, only rose at 2.5%, annual rate down from 3% in the first quarter of the year. However, on a yearly to yearly basis, excluding volatile food and energy prices, it was down to grew at 2.8% from 3.7%, as you guys can see here, meaning that inflation has been going lower on the last year, on the previous quarter, I mean, okay? And excluding food and energy, the so-called PCE prices was unrevised at 4.1%. Overall, gross domestic purchase prices has been up 2.4%. It was near the PCE prices changes as well, if excluding those, meaning it was showing that inflation side based on this GDP price purchase was still around the PCE data, showing that inflation was also going down even from what the Fed is looking at from the core PCE inflation. So this data was from the first quarter of 24. Okay. Okay. All right. So with that, we will be having this disclaimer. Let us have a look on the charts, see what has been going on. All right. It seems that nothing has been going too much. That is the gold side, right? That is the silver side. Okay. It seems that everything is still on track, breaking up higher. So I'm expecting there isn't a lot of changes on the market on the silver side. And we will see whether it could continue this kind of pace. All right, guys. Meanwhile, let's get back towards the YCHpro. All right, okay. It seems that the market hasn't been moving that much, but it has been going lower as expected, and the entry has been executed as well. Okay, so we will be having a close look on it because it will be a short trade and the momentum is still going lower from this side. Probably we will be checking from the USD CHF. It could be probably showing some signs on it as well. Okay, So maybe we can also try to enter this trade, but it was a similar trade with the Euro CHF, so I won't be recommending it to do. But probably we can try to do the USD Japanese yen. Okay, it seems that it has broken down below 143.1, guys. Okay, so probably we can try to enter the trade on this Japanese yen side. But it seems that it hasn't been doing that good. As you guys can see, it started to rebound on this Japanese yen side. Alright, so we will be having a close look on that. But definitely, the Japanese yen is still very much pretty clear. It's going lower, but we are not seeing that clear signals on the market for now to do that short. Okay, Euro Japanese yen also didn't show any clear signs on it. AUD Japanese yen definitely it's rebounding from that support area. And lastly, NZD Japanese yen, it's also rebounding from that support. Okay, so the best case Euro Japanese yen for now, but it seems that it also started to rebound. Probably the next will be USD Japanese yen, but it also started to rebound. So it didn't give us any hope for now to do that trade. Probably we'll be just waiting for more confirmations before doing that sell signal on the Japanese yen pair. Okay, it seems that the euro started to gain some strength, so that's why I'm just putting this short-term signal for you guys. Okay, so let us check back with oil, guys. Okay, so probably there will be something interesting coming up from oil side. All right, okay, it seems that the trend is still pretty much clear. I'm even forecasting a lower prices, as you guys can see. It was in line with my forecast, and right now my forecast could be going lower again. Okay, so I'm expecting lower oil prices, as you guys can see from the previous graph that I've drawn. I even forecasted that it could even reach around 64 or around 65 from the previous months. As you guys can see, I draw for you guys. Okay, let us open back towards the wider part of the charts. So I already forecasted for almost multiple times for the outlook of the oil. It's going lower, it's trending lower for the oil market. And right, just yesterday, I do share a signal where it already reached the third target price. I don't know whether you guys do follow this trade signal on the last 2 days. And right now, it seems not a very good time to do the trade because it's right now rebounding around support on a daily time frame. So it's much better to wait for more confirmation before proceeding with that. Okay, so from what we are currently seeing, there's a huge possibility for the oil to go lower again for the prices, definitely. But it's much better to wait, even though from the hourly signal, it could give us a clear signal it could be going lower. As you guys can see, it's giving us a very clear sign that it's going lower, unable to break out of this resistance. Okay, so probably I will be giving out another signal on this side. So I think this will be my last signal for today. But definitely you can sell. This will be a short trade as well. Just try to 68. Okay, so there we go. So I'll be discussing the last two part from the US side and one news from the oil side. Okay, guys. All right. So we also have the last data from the US side, which has been showing us that the US initial jobless claim has fallen to a 4-month low. Continuing claims also fell, the lowest, reaching a downward revisions from the prior weeks towards 1.83 million, guys. Okay, so this is the data 1.83. Applications fell to 4-month low, and this level still remains below the levels reached from June to August. And the 4-week moving averages also fell to the lowest since June, and the initial claim before adjustment fell by 6,000 to 180,800. And Texas and New York registered the biggest declines. As you guys can see, the trend is pretty much clear, meaning that a lot of people are getting hired, or the expectations that people are not claiming that much is due for the reasons that there's a rise in unemployment rate and slowdown in the pace of job creations. And economists says that workers eligible for such benefits have not been losing their jobs. So that's the reason. Not a lot of people are losing their jobs, guys, okay? And you can see that even though a lot of companies have been declaring it, such as Paramount Global, General Motors, but still, the unemployment claim hasn't been that high. Okay. And if layoffs increases in the coming months and more Americans find themselves unemployed, Federal Reserve officials would likely consider reducing interest rates faster than they currently feel. And the separate data showed that durable goods were stronger. GDP product was also growing stronger 2022 and 2023 than previously reported, and as a result, the US Treasury yields rose and the SP 500 futures were little changed. Okay, let us, because I believe that the data has been released. Okay, so it has been pretty much well in line with our view. That means it was kind of positive for the data, as you guys can see. Okay, from my side, it seems that the US core PC data has not been released, but it was lower, meaning there's a huge chances for the interest rate to be cut by 50 basis point, guys. Okay, so from this data has been showing that inflation was going lower based on the Fed's core inflation's PCE data, and even US consumer spending started to spend lower, guys. Okay, so that means it's a very positive news for the gold, and it could be reaching our price target pretty soon, guys. Okay, so it has already reached the first price target at 2,670. So congrats for everyone that who has followed that signal. I believe for the silver side, it could be reaching its price target as well. It has already reached its first price target too. So if you guys have been following this live stream since the beginning, you guys should have been able to profit out of it, okay? So congrats for everyone who has been viewing this live stream, because you guys have been able to profit from the silver and the gold. Okay, it seems that this is also on track to become a profit as well. So pay attention towards this trade, guys, okay? Gold has reached it. So I suggest that for everyone who has been watching this live stream, I do suggest that you guys should be taking a profit out of the gold trade and the silver trade, and pay attention for the Euro CHF that I've shared. It's already going lower, currently in a floating profit. So that's one of the good things. And gold has been in profit, silver is also in profit. Okay, so I suggest that you guys take profit on the first price target. Okay, it seems that the strength didn't continue. Okay, so I suggest that you guys do take profit on it. All right, so I'll be back with the last material for today. which is showing you guys that the US pending home sales changes. It's just showing that a lot of people are waiting for lower interest rates because not a lot of people are going to buy homes. As you guys can see, a lot of people are waiting for interest rates to go down, which realtors are already counting on those buyers, but it seems that the buyers hasn't been back, and a lot of homeowners with 3% mortgage rates are reluctant to sell their homes, keeping the supply at roughly three-fourths of 2019 levels. And across the US, pending sales also fell to its lowest point since the start of the pandemic in 2020, guys. So as you guys can see, pending home sales were down by pretty much, as you guys can see. So that's why a lot of people are waiting for interest rate data. Okay, so I believe I've been sharing all of this data for tonight. I've been covering the Japanese yen side, what has been happening. Oops. I've been covering on the Japanese yen side, been covering the Swiss franc, the USD, gold, silver, and oil for tonight. So it's very important for you guys to go through the materials so you guys do have an insight and will be much more confident on doing the trade because everything will be very relevant to one another from the fundamental to the technical. It could be correlated, guys. Okay. So as usual, you need guys to always pay attention toward this key setup and never forget to put them in your trades. And if you guys have any other questions, but I'm not seeing any questions since just now, so I'm expecting that if you guys wanted to ask more questions, I highly recommend it that you guys click on that link so you guys can join the chat room. So by clicking that website, you don't need to register, but you can definitely have a say on your questions and ask me anything. But it seems that from the website, I'm not seeing any questions that you guys have been asking, so I couldn't answer any of your questions. So if you guys want to get more interactive actions from my side, you guys need to click on that website for you guys to chat with me instantly. Okay, guys? Because I'm not seeing any chats on the chat room. Okay. So I'll be handing over to the next streamer, Jaden. He will be answering your questions if you guys do join the chat room. And I hope that you guys do make the profit out of gold signal, silver signal, and also the Euro CHF is already in a profit. So it's going to be reaching its first price target, guys. Okay, so pay attention towards that. So I'll be ending today's live streaming. I hope you guys do have a good week and a happy weekend for this week. So I'll be seeing you guys next week. Stay tuned and always follow us from Monday to Friday, 12 p.m. London time. Okay, see you guys next week. Goodbye.
Okay, so good evening, everyone. So today is Friday, last day of the week. So let's begin our lessons today. So overall, what we have been seeing is that the market is going low, going through a big retrenchment. So I will be talking my points of view. So from what we can see is that the price has been closing above and we are speculations that the price is going on the lower sides because you can see the daily time frame has been closing above and it's likely to close below. So because of that, we'll be using 1 hour time frame. We need to know where is the manipulations, distributions, and so on. So today our bias might be continue to do shorts, and what we can see is this area. So you can see that this is the manipulation phase, the highest of the day. Okay, so this is the highest of the day, and what we can speculate is that the price is grabbing this liquidations. Okay, you can see that this liquidity has been grabbing on, and once the liquidity has been grabbing on, what we can speculate, the price is going on the lower sides, going through this level. So our speculation is that the price is going on the lower sides and be closing below the previous day low. This is my speculations. So this is the previous day low, and we are speculations that the price is going on the lower sides. So as we already mentioned, why we are thinking that the market is going lower, one of the major reasons is that the price is, you can see that the price is grabbing this liquidations and 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 it's hard to keep on going higher and closing below. So we are likely to see that the price is closing on the lower sides. So we'll be using 50 minutes time frame. Later on, I'll be talking about why, but you can see that the price has been going where this fair value gap. Okay, so you can see the price has been going through this fair value gap. So I think it should be around this area. So you can see the price has been reacting from it. So if we want to do shorts right now, we definitely will be using a smaller time frame. So where we can see, we need to see this is the manipulations. So we need to see a breakthrough because this is an impulse going higher. So if we want to go the lower sides, we need to see the price to go on the lower sides. Then we can try to plan to do shorts because there's a lot of downtrend momentum. Okay, so later on, I'll be talking much more details about it. Okay, so what is going on, what my thought about it, and why do I think that the market is going lower? Okay, you need to have your daily bias. What is your daily bias? Do you think that the gold is going higher? You need to know what's the flow, the order flow. Okay, so later on, I'll be talking about why I'm thinking the price is likely to go lower, and there's a few things. One of the biggest thing I think is need to be mentioned is that the dollar index is reaching through the bottom line on the Wednesday. So I'm thinking it's going through on the higher place, and we also can see that this is the weekly liquidity area. So I'm thinking that the price might be reaching back a big retracement using a 4 hour time frame. So you can see that this is the retracement. Dip going down and then grabbing this liquidations going back. Then the price is going back to this level. So you can see that this is a really strong level. So I think we'll be waiting for another 50 minutes, 9 o'clock, then we can speculate that is it going higher or going lower. Right now, our speculation is that the dollar index, this might be the lowest point because why we can see that this is a really strong impulse and this is also the weekly weekly liquidity area, and we are likely to see some kind of rebounding back. Even though that later, just now, the PCE price index has been showing some kind of signs, but I'm thinking that it might be a really good time to do shorts. But I will be waiting for some confirmation first, the 1 minute time frame. Why? Because we can see that this is a strong impulse structure. So if we wanted to do shorts, we might need to have some confirmations. There's two options for you. One is that you can try to do short right now and put your stop loss above maybe this area. Maybe you can put about 10 or 20 pips and hopefully that the price is going lower. This is R&R. Second, you will need to wait for some confirmations, wait for the price to break through certain area, and then you can try to do shots afterwards. So right now we are likely to see how it happens. But yeah, so we can see that the price is going lower and then reaching through this higher place. Once the price do really break through this area, that means that the price is going higher, but let's see how it happens. Okay, we need to have some confirmations. I was thinking that the data is higher than lower than higher than expectations, because from the inflation sides, we are likely to see that price of inflations will be continue going on the lower sides. So right now we will be using this as our reference. So this is our order block. This fair value gap. This is a really important site. Once the price do really break through this area, then means that everything it's wrong. It's likely to continue going higher and maybe reaching back to this area as well. So bias is really important. Once your bias is wrong, then your setup, total setup is might be wrong as well. Okay. So from here, liquidations closing below, was thinking that the price might be closing below, but if the price do really break through this area, then it's not a really good thing. This is a really important area. So confirmations is really important, to be honest. Okay, so, I think let's talk about what's my thought about the gold market first, because I'm thinking that a lot of people will be much more interesting on the gold market. So I'll be talking about why I'm thinking on the gold market is going lower from today, and my thoughts about it. Okay, so firstly, it seems like the price is going strong, but let's see, is it holding on this fair value gap? If not, it's really it's might not a really good one. Okay, because this is a really strong order block. You can see from here, if the price do really break through this area, I think it's likely to go back to this area and then continue going higher. So I didn't know that this might be manipulations and going back to a return to fair value gap, order block reaching through, and then the price has been continue going higher. But let's talk about my thought about on the gold market. Okay, so firstly, we need to know what is your bias. So what is your bias of the week, the bias of the day? So usually I'm using internal to external. So it's internal range of liquidity to the external range, or external to the internal. So we need to know the order flow, what is going on, where is the liquidity going, reaching through. So this is really important. Okay, so going back, why I'm thinking to do shorts. So firstly, we need to know your daily bias. So from what we can see, the price has been reaching high. From this is the manipulations. Overall, the price has been reaching higher. But once the price has been going from here, you can see that from here, and the price has been difficult to going on the lower sides. So after that, we can see that the price is likely to go lower from here. My thought is that the price might be going back to this area. Okay, because why? Because we are likely to see that the price is reaching through this area because it's failed to broken higher. But after that, we'll be using 50 minutes to see. I think it's shit already. Because why? The price has been breaking through this above. This is the most important line. Once the price do really break through, then I think it's likely to continue going higher. Okay. I think let's do another clean analysis about it and see what is going on. Wait a moment. Okay, so let's begin. So right now we need to know what's the order flow. Okay, from the daily perspective, we can see that the price has been reflecting on here and then continue to expand a really strong impulse. So overall, our bias in the longer time frame is definitely going on the higher. Okay, so our bias, you need to know that in the bigger time frame is on the higher side, reaching through the higher place. So you can see that once the price has been manipulated from here and then has been continue going higher and reaching through a really new high. Okay, so once the price has been reaching through this new high, what we can see that uh, the price is likely to go through a bullish momentum. Okay, so going back from the 4 hour time frame, what we can see that this is manipulations and price has been going back to here, rebalancing out, and it's likely to continue going higher. So we are not really likely to see that this week September, the last week of the month, it's not really likely that the price will be reaching through this. It's not really likely because the price has been manipulations and then it's continue going higher. So you can see that the price has been really strong, expanding in a short period of time. So we won't be using daily to do analysis. We need to use a more smaller time frame, 4 hour or maybe even 50 minutes. Okay, so from the 4 hour, we can see that the price has been reaching through here, manipulations, and has been continued on the higher sides. So from here, we can see that this is the lower sides. So we can see that, okay, it's going on the lower sides from here, the opening price, and reaching through here, and then continue to pushing higher. So once we can see that the price has been pushing higher, overall, our bias of the week, it's likely to continue on a higher basis. It's going on the higher sides. So once we can see that the price has been reaching through here, you can see that the price has been reaching through here, reaching through here, we can see that the price has been effectively going higher and then going through a rebalancing from here. So this is because of 4 hour, 4 hour, or maybe you can say that is a daily time frame should be also fine. So going back to daily, we can see that the price has been reaching on the liquidity area. Where is going on? Will be probably here. So you can see that the price has been forming some kind of supporting from here. So going back, you can see that the price has been exactly reaching through this order block from here. Okay, so you can see that price has been reaching through this supporting line. So you can see uh, from the green, okay, so you can see that this is our point of interest. Once the price has been reaching through our point of interest, what we can see, the price will be expanding here because this is the 1 hour order block. So where do we use? We'll be using 5 minutes. So you can see once the 5 minutes has been manipulations from here, okay, you can see manipulations from here, manipulations from here, and then going back black color, we can see the structure has been broken on. This is the low risk trade, but once the structure has been broken on, we can try to do long positions. Uh, it's rather you can try to do on the fair value gap from here. Okay, here it should be fine, and you put your stop loss below from here, 5 expectations that the price is going back towards the higher sides. Okay, so you can see the price has been reaching through, going high, reaching through this area, and then the price has been what? Has been grabbing this liquidations and continue going higher sides. Okay, so going back to the 1 hour time frame, you can see that the price has been reaching through this order block. So you can see using this order block, maybe around order block from here. Yep, you can see the price has been reaching through this 1 hour order block. Okay, around this area, you can see. So this is the area. that the price is reflecting on, and we'll be going back to the internal sites. Okay, because what are we if we need to if we want the price to go lower, we need to have what? We need to have the price to grab below liquidations. So you can see that the price has been grabbing this liquidity, rebalancing out, and then from here onwards, the price has been going on the lower sides from here, grabbing this liquidations, okay, grabbing this liquidity. Once the price has been grabbing this liquidity, what we can expect, okay, so this is a 1 hour liquidity area, okay. So once the price has been grabbing this liquidity for 1 hour time frame, what we can expect, we'll be waiting for, this is our, if 1 hour time frame, we need to have 1 hour time frame. We'll be using 5 minute charts, and you can see that we need to have a same as well manipulations and break of structure. So you can see that this is a really strong structure point, breaking through and then going back to this order block. So you can see that the price has been reaching through this order block, okay, order block, and we are likely to see what? We are likely to see this is our supporting area. And once the price has been forming a support, what we can expect? We can expecting that the price is continue going higher, breaking through, and likely to go back towards this area. Okay. I'm not so sure is it possible to go back to daily, but the daily range, daily this liquidity area. So you can see that this is a strong liquidity area. Okay, strong liquidations. So you can see that if we do really do long in this area, we can put our stop loss below, or maybe even from here, and you can easily get around 100 pips and more. Okay, so overall we can see that the bias right now is going high, even though I'm just now saying that my bias is shorts because of this going lower, but the structure didn't really break through to be honest, and has been grabbing above, going on the lower sides, and because the price has been failed to break, so usually will be manipulations on downsides. Once manipulations downside, you can see that the price has been forming a market maker buy model. Once the price has been break of structure from here, okay, break of structure from here, we can expect that this rebounds is actually a really good time to do shorts. Put your stop loss maybe if I wanted to trade it on, to be honest, I probably will be doing here. But if the price do really go through here, my stop loss may be 50 pips and I'll be getting 1 to 2 should be fine. Okay. Overall, my expectation is that the price is definitely going higher. Right now is reaching through this 1 hour liquidity area. So if that really happens, where do we expecting on? We'll be using fit one hour 1 hour liquidity area. So where do we expect it on? We'll be using 5 minutes to see is there any fair value gap that we are be using on. So we'll be using this fair value gap, but we can see that the price do really touching here and then going higher. So our entry level for will be here. Okay, so will be around this area. And once the price has been reaching through, because this is a 1 hour 1 hour structure point. So we'll be using 5 minutes to reach back. And once the price has been reached back, we can try to do long and speculations that the price will be reaching back here, even much more higher to here. Okay, so overall right now, the bias of the day or bias of the week is much more likely to go on the higher sides. This week I have made some of the biggest mistake. One of the mistake is that my bias is keep on doing shorts. One of the biggest reason is that I was thinking this week is last week of the month. So usually last week of the month will be rebalancing out. So this is the fourth week, third week, and also the first week from here. 4, 3, 2, 1. So you can see that this is the candlesticks going on the lower sides, and then the price has been reaching on the higher sides. Once the price has been reaching on the higher sides, what we can expect that the price is going back to the lower sides, maybe reaching from here. I was thinking that the price might be reaching from here because the price is failed to displace, but right now we can expect that the price is going higher because you can see that replace displacement, I mean manipulations, and continue on the higher sides. So right now we are definitely waiting for the price to reaching through here. Not so sure is it possible to pivot from that area, but if that really happens, we'll be trying to do long from here and try to grab some sharp pips. Okay, 5 minutes. So once the 5 minutes here, we can try to put our stop loss from here, 30 pips or 40 pips, and you can get 1 to 2 should be fine. Okay, so right now we'll be waiting for a retracement. So overall, this is what I'm thinking about it right now. Okay, so to recap what I've been saying, one, first thing you need to know your bias. So how do you determine bias? Your determined bias is based on liquidity area. So what's the order flow going on? What is going through? What is the market going to another liquidity to another liquidity? So this is a really important thing. Once the price has been reaching through a certain liquidity, there's no reasons to go back to a place. So this is a really important thing. But the price uh, let's see on dollar index. Reaching on the lower sides. Seems like continue going lower and reaching on here. But yeah, it seems like the price is going on the higher sides and reaching on the liquidity area. This is a strong impulse, so we are likely to see some kind of support from here. This is a 1 hour fair value gap order flow. So we are likely to see some kind of 5 minutes supporting line from here. So once the price has been forming some kind of support, you can exactly just try to do long and wait for we can get 1 to 2, 2 to 1 should be fine. Okay, put our stop loss just below this area. Okay, and let's see, is it 50%? Okay, so here, yep, it is 50%. So this is a really good entry. So once the price do really reach through here, we can try to do long and put our stop loss below that from here and getting 3 to 1, maybe even higher to this area because this is overall a market maker buy model reaching on the higher sides. Okay, grabbing liquidity and continue on the higher sides. Okay, so let's go back what we have been mentioned. We have been mentioned that we need to know what's the bias of the week. Okay, so what's your bias? How do you determine a bias? It's determined on the liquidity area. So let's see. Okay, determine bias is by liquidity, internal to external, time-based liquidity. So what is time-based liquidity? Time-based liquidity is uh the the daily high, daily low. You can see that the price of daily high and daily low, yeah, from here. So once the price has been going back to daily low, so this is a second internal range, and then it's continue going on the high side or weekly candlestick. Okay, so from the weekly perspective, it's definitely going long, long, and continue going on the higher sides. Okay, so we are definitely reaching through on the higher sides, and we are using 5 minutes to see. You can see this is a really strong supporting line. We'll be trying to do long in this area, and just put your stop loss below because this is a really strong fair value gap from here. You can see this is a strong fair value gap area. Okay, once the price has been reaching through, we can try to do long positions and just try to grab above here or maybe even here. To be safe, we can try to make it here. Or if you wanted to, I think we can try to make it here, this area. Time-based internal external time-based liquidity market maker buy model, and then after that you will need to know the next thing is you need to know uh the impulse structure, then the manipulation displacement, and then after that is time-based liquidity, I mean time and price, and so on. Okay, so let's go through you the most important thing is that you need to know the context behind of it. To be honest, I was thinking that the dollar index is going lower, on the higher side, but it seems like the price has been grabbing these liquidations. So once the price has been grabbing this liquidity area from here, so you can see this is the 50% area. Once the price has been grabbing this gap liquidity area, it's definitely showing signs of going lower, to be honest. But I was thinking that probably might be going on the higher side. But once the price has been reaching through here, we can see that this is the internal and going back to the external range. So where is the external range will be going on will be around this area. Okay, so this is our external range. Okay, okay, so this is our external range. So where is it? You can see that once the price has been going on, going back to the internal sides, then a strong impulse going back, and then continue going back to the internal to the external. So from here onwards, we can try, because this is a 4 hour time frame, 4 hour time frame, sorry, because this is a 4 hour time frame, so we'll be using a 50 minutes. Okay, so what we can see, okay, so what we can see, the price has been grabbing these liquidations, fail to break through, okay, fail to break through. Once the price has been failed to break through, manipulations from here, displacement going back on the lower sides, and it's continuing on the lower. And now the price is forming because our bias is going short. So we can see that the price is forming some kind of uh, market maker sell model. You can see this is accumulations 1, 2, 3 breaking structure, and then this is a really good one, and then the continue it's got continue going lower. So overall, what we can expect, okay, you can see that price has been reflecting on our order block. I mean our what we can see this fair value gap, and expected that the price is reaching on the higher sides. Okay, we just miss out a trade, everyone. We just miss our trade, but it's okay. We can try to use a 1 minute charts to find out some kind of uh let I'll be teaching you guys how to form confirmations. So right now we can see that this is from the 1 minute time frame. This is the manipulation. So what we need to see, break of structure. So we need to see the break of structure from here. So once the price do really break of structure from here, we are safely to say what? We are safely to see that the price will be continue going higher and higher. Even though that this is it? We can say that this is 50 minutes order block, or maybe even 5 minutes. Let's see. Go is really something. Uh, didn't expected that this might be a spike up and then continue going lower. I was thinking that this is might be the highest of the day. Yeah, it's not really likely to go lower, but if this are really a manipulations, then this might be a really funny case, to be honest. But overall, uh, yeah, see how it happens. If that is really reaching this low and this low, And this is really funny to be honest, because this is um, reaching true, going high. Yeah, let's see how it happens. We'll be using because this is 1 hour time frame of liquidity area. So we usually will be breaking through some internal sites. So, but there's no internal, so we'll be using maybe here, but no, not really. Let's see how it happens. Okay, we are planning to do long here, but we need to have some confirmations. Spike up or maybe spike up from here. Then if that really happens, we can expect that the price is reaching through here. But this one is a strong impulse. You can see that this is a too strong impulse, and this is a market makers a buy model, and likely to reach through maybe around this area, equal high, equal high, equal high, or this area. So likely to see continue go on the impulse is more likely. Okay, so we need to have some confirmations, maybe the price forming some kind of support from this fair value gap. That's possible. So you can see the price do really force some kind of order block from 50%. Not really liking using 1 minute, but sometimes it do really helps. So you can see this is the 50 minutes, 50%. Now we need to have some break of structure. Okay, this manipulations. Once the price do really break of this structure point, we can exactly just do long, because you can see that this is the short still in play. Okay, to be explaining much more easier is that the shot is still on play, and we are likely to see some kind we need to see some kind of displacement above. Okay, so you can see this is the manipulations. There's chance once it has been going external, I mean manipulation, displacement, and then internal to external, and we are likely to reach through this area. So right now we are waiting for the price to break through here. Hopefully that the price do really break through here. If not, maybe this is not a really good one. So confirmation is really important. If you know confirmations, you can avoid a lot of a lot of bad trades. Okay, so right now it's even though that price do really form some kind of uh, support from the fair value gap, but we can't do any trade right now. We need to have a strong impulse from here. Once the pop impulse has been hit here, we can confirmation is that the price is going higher. So right now you can see that the price is going forming what? Forming a market maker buy model as well. There's a possibility, okay, market maker buy model. From here, this is the first one, second one, third one. So let's see if the price do really break through this area. Once the price has been breaking through this area, we are likely to see to continue on the higher sides. So we need to see a strong impulse using 1 minute. But if the price do really close below, then I think might be happening some kind of seek and destroy. Okay, so let's see on the 1 minute time frame. Let's wait for confirmations, and once the confirmations has been formed, we can try to do trades together. So you can see the steel market is also the same, grabbing these liquidations, forming back on imbalance, and it's likely to continue going higher. Yep. We need to have some kind of confirmations. If we do long in this area, where is your stop loss going on? You can put here, but it's quite easy to stop out from here. So you might need to put on here and expecting that the price is going here or much more higher than this. It depends on how do you want to trade. Do you want to trade using risk reward ratio much more higher, or if you want to trade with much more confirmations? So if you want to have confirmations, then your risk is definitely lower, but your RNR will be also lower as well. So we'll be waiting and see how it happens. The all index seems like continue going on the lower sides from here. Where is the lower sides? 10. AM, reaching through, rebalancing out, rebalancing out from here. And then once the price has been rebalancing out where we are expecting on, we'll be expecting on the price is to continue going on the lower sides, reaching on this low and lower. So yeah, the gold market is actually on the higher sides. Okay, crude oil, if you still remember, we have been saying that crude oil, we are definitely doing shorts. So going back, I've been clearing out a lot. So okay, crude oil. Crude oil, we have been mentioned that the price is going lower. This is a really good trade. You can see that the price has been going higher and has been forming displacement. So we are doing shorts from here. If we been continue holding from here to here, I think we can gain 5 to 6K to be honest. But uh, I think we need to know each of the financial products on their their prospective. Okay, but next time we'll be talking much more details about it. Okay, so okay, it seems like the price has been forming higher. So we need to have some break of structure. Once the structure has been break, giving some kind of strong impulse in the 1 minute time frame, we can try to do long and expecting that the price is going higher. Even though that we can just try to do long here using this fair value gap and then just put your stop loss below and hopefully grabbing above. But if you want to have confirmations, you need to wait this break of structure. Once the break of structure has been break, you can just try to do long because the price has been grabbing a liquidity area. Is there's no reasons that will be going back to the lower sides. So we can try to do long and expect that it's going higher and higher. Okay, so hopefully everyone do understand what I mentioned. So if not, I think we'll be having a class. We'll be arrange a class in maybe in the future, but right now let's see how it happens. Okay, 5 minutes, 1 minute. This is actually a good time to do long positions here and then put your stop loss below and hopefully you can get above from here or maybe even here. Okay, okay, so I think let's talk about what is going on. Okay, so we have been prepared this and let's talk about on this week. We actually can see that the dollar index is going a ranging mood. One of the biggest reason is that this week is the last week of the month, so it's likely to give us some ranging mood. So if you like to do short-term trading, this week might be very beneficial for you. So because it's going through a ranging area. Okay, so if you are really good on doing short term, maybe this week is more likely on your case. So what is going on this week? This week is actually giving us some mixed data. One of the biggest mixed data is uh, this. Okay, the first week of the day, Monday, will be announcing on service PMI and also the manufacturer PMI. Manufacturer has been keep on going lower, but the service PMI has been continue remaining on the 54.4. This has been showing that the economy has been maintaining a solid growth in third quarter, and it should be noted that the uncertainty US elections on November has had a certain impact on the business confidence. So overall, we can see that this data is higher than expectations and it's likely to give some support from the dollar index. Okay, on Monday perspective. So going back on the charts, what we can see, okay, you can see that Monday, okay, going back to the Monday, reaching back. This is Friday, Thursday, Wednesday, Tuesday, Monday. So you can see Monday is going through high. So you can see high because of the data. Okay, going back to our next day, okay, the consumer confidence index. So the consumer confidence index is a really has been dropping a lot from 105.6 in August and dropping back to 98.7 in September. So the consumer sentiment has been weakening due to the concerns about reducing working hours, slowing payroll growth, and fewer job openings. So overall, we can see that the sentiment has been weakening uh, because of the I mean the employment sites has been slowing down, and people has been really fearing that the I think really fearing that recessions might be increasing. There's something point of that. So because of that, we can see that this has been creating a lot of pressure on the dollar index. So going back from the charts, so going back from the charts, so you can see that this has been putting pressure on the dollar index going on the lower sides. So you can see that right now or recently this week is going through basically using data to push the market lower. So once the data has been forming, then the market has been going lower. Okay, next, we'll be talking about the Switzerland policy rates. Okay, one of the bigger reasons, a lot of people has been speculating that the Switzerland will be cutting rates on 50 basis point. Okay, cutting rates on 50 basis point, but in the end, Switzerland National Bank is lowering down on a 25 basis point to 1%. Overall, we can expect that the Switzerland will be continue cutting rates. One of the bigger reasons is that their inflation has been going lower. Their economic situations has been weakening as well. So further cuts in SNB policy rates may become necessary in the coming quarters and ensuring price to the stability over the medium terms. So overall, what we can expect is that the policy has been rolling down, and this will be likely to putting pressure on the SMB policy rates. So going back from the currency strength index, we can see that the CHF pairings has been likely to remaining low as well, and this will be giving some kind of support from the CHF pairings. So the CHF pairings has been forming some kind of strong supporting line, and this has been putting a lot of pressure on CHF has been putting a lot of pressure, and this will be giving a lot of support from the commodity currency, such as the AUD pairings, the New Zealand pairings, and also the CAD pairings as well. So these pairings usually will be forming a lot of supports. Okay, other than that, next we'll be talking the RBA risk statement. RBA stands for Reserve Bank of Australia. Okay, inflation has been fallen substantially since the peak in 2022. Forecasts do not see the inflation returning to the stability to the target until 2026. It's likely to see that Australia is most in the G7 countries is most likely will be maintaining their high interest rates. Therefore, we can expect it that the market will be reflecting on the RBA, the AUD pairings will be forming some kind of support. So going back, we can see that the AUD pairings has been forming some kind of support, continue maintaining a strong strength, and then has been putting a lot of pressure this week on the USD, CHF, and also the JPY pairings as well. Okay, so this week is actually this few datas. Okay, the US service PMI, the US consumer price index, S&P policy rates, and RBA and, and, and as well. Okay, so from the US economy data perspective, we can see that has been slowing down, especially on the inflation sides, the employment sides. Just the spending power still remaining strong, but we can expecting that in the future will be likely to go through a weakening as well. So we are possibly to see that dollar index will be continue going on the lower sides. Okay, so dollar index will be continue on the lower sides. Okay, so what is going on yesterday? Yesterday we have been forming a lot. Well, let's see the market first. Okay, so let's see the market and see how it happens. Okay, it seems like okay, the price has been break of this structure point. So we already mentioned if you wanted to do long, you can try to do long here just now. Okay, and put your stop loss maybe around here, and you can get one to four or one to here. Okay, but this one is actually a quite good. We will be trying to do long in this area because the price has been breaking through this area and forming some kind of support, and we will be doing long positions from here. Okay, why this is a auto block, and we'll be trying to put our stop loss below this area. Okay, so let's see, be doing our long positions from here. Okay, so once the price has been forming back, we can speculate that price breaking through 50%. Is it 50%? Yes, it is. We're doing long on the discount area. Once the price has been on the discount area, we'll be doing long positions and speculations that will be going higher. So 2 to 1. So right now it's definitely going higher. So doing long will be much more beneficial and expecting that the price will be reaching through this area. So doing long will be much more beneficial. Waiting for the price to reach you here. If not, let's see how it happens later on. Okay. Okay, let's do a trade together. So let's see the comment section below. What's your thought about it? Okay, whoa, there's a lot of questions. Okay, okay, goal is weak for the data coming out. Comparing teacher is great on signals. Okay, thank you. And silver is on the rise. Okay, thank you for everyone joining our. Okay, so we can actually just do long positions away and right away and just put our stop loss maybe around here. And we are planning to get above to this level. Okay, even though that it's probably maybe going much more lower, but we are likely to see the price to go on the higher side still. So this is a break of structure going back. So let's see how it happens. Whoa, didn't expecting that the price will be reaching back towards this area. But wow, you're really a strong, strong lower sides. Whoa, what did it? Wow, so fast. Didn't expected that we'll be reaching back to this area. Yeah, I think we might be stopping out. There's a chances, quite high possibility that we'll be stopping out. Yep. Okay, didn't expecting that stopping out. Hey, oh, what is really going on in the gold market? Keep on stopping out recently. Mm-hmm. But oh, interesting. Keep on stopping out. Was thinking that the price has been reaching through this area, but didn't expecting to so fast. Recently, recently thinking that there's a possible. Okay, this is a real account, but draw down real account, going back, looks like it's really going on the go line. Keep on swiping off. Hmm. I think let's do the most technical way. Haha, it feels like dollar index maybe reaching through some certain area, grabbing liquidity. Oh, didn't expecting on grab of liquidity. So restriction. Maybe I use a smaller time frame. Need to use a bigger time frame. Easy to stop out. Oh. Hmm. Hmm. Easy to stop out, everyone. Keep on going lower. Didn't expecting that so much lower from here. Multiplications, displacement. Huh, really funny. Okay, from here, from here, then going lower. Wow, didn't expecting that, to be honest. Was thinking that the price is going higher. But the price, hmm, interesting. Interesting. Okay, our index has been reaching up from here. Maybe grabbing this liquidations. Uh, yep, probably will be going much more lower from the gold market. Fast. Need to see the bigger time frame. The gold market has been really, yeah, seems like the price is going a bearish momentum right now. Think let's avoid trading from gold for right now. I might be trading the Euro USD next time. I think that it's much more stable comparing on the gold market. Gold market quite easy to swipe off. Okay, so let's go back. It seems like the price will be reaching this low, grabbing these liquidations. Yeah, I think this can hold. Maybe here the price might be reaching through here and grabbing to this range. Once the price has been grabbing this range, then let's see how it happens. Okay, so let's go back to the charts. Okay, happened yesterday. There's a lot of news. One of the biggest news is that the new orders, okay, the US new orders has been higher than expectations. This is a really good from the dollar index. Okay, so the new orders for manufactured durable goods on August is up six of the last 7 months, excluding transportations. New orders has been increasing 0.5%, and one of the most important is the electrical equipment, appliance, and also the components are up to of the last 3 months drove the increasing of 0.3 billions or 1.9% to 14.4% billion. So you can see that overall this data has been driving on the dollar index continue going on the higher basis. Next is the USD GDP. USD GDP is remaining unchanged, continue maintaining about 0.2% or maybe 3% around that area. So this figure has been represents that the continuous of the previous month growth rate, indicating a steady and consistent economic expansion. So this is also giving some kind of support from the dollar index. And the GDP figure is in line with the forecasting rates of 3%. Okay, as we already mentioned, this has been giving some kind of support from the economy situations. So the current economy policies has been conditions fostering a stable environment for growth. So in conclusions, the latest GDP data paints a picture of a stable and consistent US economy. Okay, so this is what GDP data show us. Okay, next is the US service PMI. So the US service PMI is okay. So overall, this is what is really going on, and this has been forming some kind a lot of support from the dollar index. So the dollar index has been forming a lot of support from it. Okay, he didn't expect speed out and then reaching out. Maybe it's really on the 50 minutes time frame. Sick and destroy. Wow, really sick. Didn't expecting that the price is the fair value gap don't really respect on it. So yeah, next time I think we'll be probably using probably you'll be using order block much more frequent rather than fair value gap. I think that the market keep on disrespecting on the fair value gap right now. Okay, so this is 1 hour time frame. 1 hour going back from the 5 minutes. So the price has been reflecting on here. 5 minutes. So yeah, likely to continue going higher. Break of structure, break of structure, and so yeah, next time we'll be using okay. Damn. Lesson learned. Trade goal use order block much more efficient rather than fair value gap. Fair value gap easy to swipe off. Liquidity easy to swipe off. I think it's mostly because the volatility of the market is quite huge compared to compared to other pairings such as the currencies and other as well. So we are likely to continue see going higher. Just see when is it. Damn. Hmm. Strong impulse. Strong impulse. It's no fair value gap. No fair value gap means no strong impulse. Okay, understand. It's a so. Okay, so waiting for the price to reach you. Really? Price has been flying higher. Didn't expect it on. How's the silver market? Silver market didn't really uh, explaining a lot. 1 hour to 5 minutes. So 5 minutes. Whoa. 5 minutes. 5 minutes. We can meet it here. Let's see what has happened. Okay, so going back on our last chart, this is the currency strength index. From the currency strength index, we can see that the AUD pairings, the New Zealand pairings, and also the CAD pairings has been continue forming supports. And other than that, the risk assets such as the USD, the CHF, and also the JPY continue remaining low as well. So from that point onwards, this week actually, if you do AUD USD, New Zealand USD, I think probably you are gaining a lot of beneficial. It's probably will be continue going higher. So doing long on the right pairings is really important. So in going back from the AUD USD pairings, so you can see that AUD USD pairings this week is going on the high and reaching through on the low. Once that the price has been reaching through, the most important thing is using the right time frame. So to be honest, from here, this is it 4 hour or daily? Let's see. Probably you will be using daily. Is it weekly? Not weekly. So daily then we'll be using 1 hour time frame. I think let's use daily back. Friday, Thursday, Wednesday, Tuesday, and Monday. Price reaching low and then going higher. Going back on the 1 hour time frame. So Friday, Thursday, Tuesday, Monday. Sorry. Monday, order block here. Well, from here, going back on the 50 minutes, once the price has been breaking through, we'll be using this is our flow, putting stop loss 10 pips and getting 30 pips. Okay, once the price has been reaching low, going back on the 50-minute time frame, waiting for the price to react, break of structure, going back on the lower sides, then we can likely to go on the higher sides. So overall, doing long on the currency pairings, I think it's much more, how to say, much more stable. Oh, the price do really reach through our area, but we didn't do long. Oh shit, too bad. Okay. Oh, seems like the the price wanted to go much more lower. Yeah, it seems like the price wanted to go much more lower, to be honest. Let's hit the market maker buy model. It's hard to decide from now, actually. Oh my God. Hmm. Actually didn't really break. To be honest, not really confident about this one because they didn't really break through here. Maybe might be going lower. Grabbing liquidity forming on lower sides. Yep. Seems like continue going lower. Who knows? This might be a market maker sell while reaching through liquidity and going up. Well, if that really happens, then the gold market is really unpredictable comparing on other pairings. No wonder no ICT try to trade using gold. It's a bit hard to be honest. Yeah, it seems like we'll be breaking through this low. If that really happens, I think might be reaching this low, maybe 1 hour area. Grab of liquidity, still, yeah, seems like price wanted to go this low. Uh, wanted to go this low. Hmm. Okay, so going back from the AUD if you do really know, you can see that it's really likely to go on the higher sides. The crude oil will be continue on the lower sides, and the A50. Recently the A50 has been going quite a strong move. To be honest, one of the bigger reason is that they have been dropping their rates, and this has been forming a lot of support from the stock markets. So stock market has been boosting higher. I think same as the SP 500. So let's go through this SP 500 as well. So yeah, going back from the SP 500, we also can see that the price has been reaching through new high. This week we didn't really see any, really good trade from this. We can try to trade here, to be honest. This fair value gap area. So you can see that this is a fair value gap area going back from the 50 minutes charts. So we can see that price has been reaching through, going on the lower sides, might be reaching back on this area. There's a possibility. Okay, gold has been, yeah, seems like price has been reaching on the lower sides. But hmm, gold is really confusing. But once this liquidity has been grabbed and refused to break through this, so it's likely to go on the lower sides. Might be reaching back to this area. Yeah, I think likely to continue on the lower sides. So this might be a liquidity grab. So I might be right from the beginning. So this is the break. lowering down, reaching through on the lower sides. Didn't expecting that this grab, so might be continue on the lower sides, reaching on here or maybe even here as well. So I think I won't be doing long right now. It seems like the price of gold market it's likely to go lower and reaching through maybe at least to this area, this equal low. Okay, so at least we'll be reaching through this equal low. I'm quite confident that the price might be reaching to this equal low. So don't try to do long right now. Okay, why? Because we can see that the price has been grabbing this liquidations. So it's probably will be reaching through on the low sides. At least this equal low, maybe forming some kind of support from here. Okay, so doing shorts right now is definitely beneficial. Didn't expecting that to happen, to be honest. So this is really rare. This is the highest point. Didn't expected that this is the swipe of liquidity, and once the price has been swiping off, and it's likely to continue going lower right now. Okay, so oh, didn't expect. Didn't expect it on this move. Yeah, seems like we'll be continue going on lower sides and reaching through on the lower. This also forming some kind of liquidity area from here. So it's likely to see dollar index going higher, and this might be putting pressure on the gold market. So gold might be reaching through a new low, everyone. So don't try to do shots right now. Definitely not a really good time to trade. Didn't expect that to happen. Yep, might be reaching through this low. The price gold market not a really good thing to trade. Uh, so, well, okay, so we'll be summarize what we have been saying today. Okay, so today we have been teaching you guys what is really going on this week. So let's get a really fast recap. So this week, the U.S. economy situation is not really that bad. We can see that the service industry has been going great. The GDP has been remaining strong, and also yesterday the new orders. And other than that, the new orders the GDP data, and other than that, it's going strong as well. So this has been putting some kind of support from dollar index but today the PCE price index has been putting a lot of pressure on dollar index because it's been dropping to 0.2%. I'm thinking that this might be a manipulations, but who knows? But the data has been showing that it's 0.2%. Other than that, we can see that this week the service PMI has been higher than expectations, the consumer index has been lower than expectations, and also the Switzerland. Aussie rates has been dropping to 0.25%. So it's likely to go through what? It's likely to continue cutting rates. Switzerland will be continue cutting rates. The Australia will be remaining their rates as well. So this will be putting a lot of supports from the AUD pairings. And other than that, this week, if you try to do long in AUD pairings, New Zealand pairings, and also the CAD pairings, you definitely will be gaining some money about it, and doing shots on USD JPY and also the CHF pairings. It's a good day. Okay, so this is what is going on from the market today. I'm quite sorry about it. It seems like I've been swiping off. Maybe I'm too focusing on the lower time frame. But once the price do has been reaching through this level, it's likely to go through, continue going on the lower sides. Okay, didn't expected that happens. I might expected that this all block of beverly gap reaching through, reaching higher, going lower. So it seems like the price still grabbing this liquidity area, but you really can't say much about it, to be honest. I think this is a really choppy ride. A lot of people might be losing here. Might be focusing too short term. Yeah. I think next time let's use a bigger time frame to trick gold if we wanted to. Standard range going all the way to this side. Hmm. Yeah. Grabbing of liquidity. Okay, I think that's all for today. So if you have any questions, please do ask. We have another 5 minutes left. If not, we'll be ending today live sessions. Sorry, today, I mean, lately have been performance not that good to be honest. One of the bigger reason has been keep on swiping off from the gold market. Friday, Thursday, Wednesday, Tuesday, and Monday. Didn't really expect that, but hmm, let's see. Using the this as our reference. Maybe I'm right in the beginning. Price is going lower, but didn't expected that this grab the data. I think that the market using the data to manipulate everyone, thinking that it's going long. But other than that, it's likely to go on the lower sides. From what I can see right now, the market is going on the lower sides and will be probably breaking through to a new low, maybe around here. Yeah. Okay. Seems like the market is grabbing through new low and will be probably reaching through this lower sides. Right now, I'm thinking that the market is going through some kind of supporting line and then we continue going on the lower sides. This week, if you do shorts on crude oil, it's really easy and is super comfortable. Doing long AUD is super comfortable. Doing maybe doing trades on Euro USD is not that comfortable, but GB USD it's also quite okay. Going higher, rebalance, and going higher. But the gold market, to be honest, is really choppy right from here. And then other than that has been continue going through a ranging area. Okay, so yeah. Mhm. Okay, so that's all for today, everyone. If you have any If you have any questions, we'll be see you guys next week. Thank you for joining, and we'll be see you guys next week.